I've said time and time again that SACCOs are meant for loan purposes. So if you're a person who believes in taking out loans, or if you're a person who believes that you can be able to develop yourself or achieve your things or your financial goals through borrowing, a SACCO is the best place because it gives you flexible options of getting loans. Hi guys, welcome again to another episode of Financial Literacy. My name is Jane Dishu. I'm a financial advisor and thank you so much for being here. In today's episode, we are going to discuss more about SACCO. For those people who are hearing a SACCO for the first time, so SACCO is an abbreviation of Savings and Credit Cooperative Society. So that's the full meaning of a SACCO. And as the name suggests, SACCO is a place where you're given a platform where you can be able to save your money as regular as possible. And then after you have saved, you can be able to get a loan. So the first thing about a SACCO, they were designed fully to give you credit. So if you're only in a SACCO for not credit purposes, maybe to just save for a particular goal, I always tell people that we have better options where you can be able to get even better interest rate, or you can be able to get better services than what you can be able to get in a SACCO. Comparatively, you have seen a movement where people are moving from SACCOs and they are going to money market fund because they are getting a better interest rate of maybe 13%, 16% compound interest in the money market fund. We have even the treasury bills which are even giving you better platform. So the whole reason why SACCOs were put in place, it's not for investment purposes, it's for you to grow your credit score or to be able to access flexible borrowing. One of the reasons why SACCOs were also founded is because you're given like an option of getting maybe a high credit score. So for example, if you were to get a loan in a bank, you need to have maybe transacted a certain amount of money. But in a SACCO, they have options of even giving you times 3 of your savings, times 4 of your savings, into option in case you have guarantors or you are able to self-guarantee, which you're going to discuss in the next option. So one of the consideration when you want to join a SACCO is you need to have a community or people we call guarantors. These are people who are going to guarantee you or who are going to sign for you, because most SACCOs will not like take security. They rely on maybe if you have people who are saving that SACCO, they can be able to sign and guarantee. Guaranteeing mean in case you are not able to pay for that loan, these people will be able to pay your loan, or they will pay your loan either using their SACCO deposits or the amount of money they have been able to save, or either they will be deducted a certain amount of money which you were supposed to pay for that period of time. So when you're choosing a community, you have to be very careful because you need to understand the money personality of these people. You also need to understand like what kind of people they are, like their financial discipline. You need to understand like their morals. You don't want to get in a scenario where you guarantee someone a loan and then they default and then you're left with a financial burdens where you're supposed to pay for someone's loan. And I really recommend, if you don't have a community of people you know in a SACCO, try as much as possible to first develop that community. Try maybe to start with a chama just to learn like the money personality of these friends of yours you want to join a certain SACCO. I tell people patience is a good virtue and delayed gratification is a virtue. So if you don't know people you can join in a SACCO together, you can develop that community by starting a merry-go-round and then see the way those people are acting around money, around contribution, like see their lifestyle, get to learn those things. Of course, you are the great person and you know the reason why you need them to join a SACCO. And this is how most of us have been able to get guarantors, myself included, because most of the time it's very hard to just trust a stranger. For my case, I don't sign loans for strangers. I don't guarantee strangers because I don't know you. So it really revolves around my friends or people who we have been able to grow together, or people who I understand their financial discipline and I understand their financial and money personalities. The second thing after you have identified a community is now getting like the SACCO you want to invest in. So one of the consideration you need to get is to understand if this SACCO have been regulated by SASRA. So SASRA is a body that regulates SACCOs in Kenya. So for a Sacco to be regulated in Sasra, they must have had a deposit of around 100 million. That means that Sacco is like stable, or it means like that Sacco have been able to have so many people. One of the things that I need all of you to understand, Sasra does not act the same way central bank would act, or the same way insurance regulatory would act in case maybe that Sacco went down. And that's why I always tell people, even if this Sacco is regulated, you need also to understand their management. You also need to understand how they are able to carry their transactions. Like, don't skip an AGM of a Sacco because you're a shareholder. You need to be there. You need to understand like what is happening. Are we making losses? How are they giving out loan? How are the defaulters like you get to understand the basics. I always tell people, like, even if a Sacco is regulated, they can actually run away with your money. And if a Sacco goes down, there is nobody that is going to give a money. There is no security at all. They are not insured, so your money is just going to go down. And those people who had loan get the advantage because they will not have to pay off the loan. And then the people who did not have a loan, they are going to lose their money. So even if a Sacco has a very big name, because we have seen that, I know you guys have seen the dramatic scenarios of famous Saccos which have been trending, which have been even endorsed by big people, which are regulated by SASRA because the deposits are above 100 million and other regulations, but they still went down because of poor management, poor investment options, or maybe a high rate of defaulters or withdrawal rates. So you need to be very careful and also be like an involved person in that particular Sacco. And if you hear any news about that Sacco going down, you need to have an upper hand and you need to just be keen on information. And I always tell people, if you're in a Sacco, make sure that you have a loan. It's like your security. That is your only security if that Sacco was to go down. The other thing you need to understand is the minimum share capital. So when it comes to Sacco, we have the contribution amount. Okay, I know you can join a Sacco with as low as 500 Kenya shillings. So you need to understand the management fee, the transaction fees that goes to that Sacco, or the amount of money that you need to pay, like the mandatory fees that you need to pay at the end of the day. Then after that, you need to understand the amount of money that goes to your share capital. So in most Saccos, they have like a minimum threshold of share capital. So what share capital means, this is like an amount of money that you cannot be able to withdraw. Like it means like you own part of that Sacco, or you become a shareholder, or you become like a partner in that particular Sacco. So if you are a shareholder in any company or in any institution, that means that you cannot be able to withdraw or liquidify your shares. You can only be able to transfer your shares. So get to understand the minimum amount of money. Mostly when it comes to dividend payments, our shares will get high amount of money because these are deposits which cannot be liquidified. They will still stay in that Sacco. So even if you are leaving, you have to transfer them to another member. The other amount of money is the regular deposits or the savings. So this is like the amount of money that you can be able to withdraw in case you want to leave the Sacco. This also will earn you like an interest, or this will also help you like get a loan. So most of the time you'll get the savings because you can be able to access them. It's going to give you less amount of money when it comes to dividends, or when it comes to the interest that you're going to gain out of it. Disclaimer: if you are looking to stay in a Sacco for a short period of time, or maybe for mid-term goals, not for a longer period of time, it's good to make sure that you capitalize on having more savings than share capital. Like you need to grow more savings than share capital, because it is easy to access your savings, like it is not easy to transfer the shares. Most of the time, if you want to leave the Sacco in the short term or in the long run, one of the things that you need to do is you'll have to sell those shares to a member. And most of the time, because they know you're desperate and you're pressure selling, most of the time they are going to ask for a discount. So if maybe your shares are 100,000 Kenya shillings, you're going maybe to sell it at a loss of 90,000 or 80,000 because you want to leave that particular shareholding or that Sacco. But for your savings, you're going to get back all the amount of money that you will have saved in that particular particular account at the end of the day. The other thing that most of us ask is the interest rate, or what we call in Saccos dividends. So I have seen so many people feeling like 16% is an enticement, 13% is it's a high amount of money. But I want to tell you that the dividends that are paid in a Sacco, they are not guarantees. They are not guaranteed. We don't like have a minimum dividend that can be paid by a particular Sacco. This is because dividends purely depends on like how that Sacco performed for that particular year, or the amount of money that went out in loans, the amount of money they got, like the repayment, the interest that they got from loans, and other services which Saccos offer. So at the end of the day, even if you're getting a high interest rate, that doesn't guarantee that that is an investment, and you should not look into other things. One of the other things, this is a simple interest. That means that they will not consider even if you did not withdraw, or maybe you decided to put in the amount of money. It's not compounded at all. It's just a simple interest, or a reflection of the savings you have and the share capital you have at the end of the day. The other thing that really most people ask is like, how do I access these loans? So when you want a loan facility, one of the things that I have mentioned over and over, and I think I have done like a whole video explaining how you can be able to grow yourself using loans, and I'm going to link that video on the description below so that you can be able to understand how you can be able to plan around debt and borrowing. So one of the things that you want to consider is that the amount of money that the Sacco gives, like if maybe they do give you times 3 of your savings, times 4 of your savings, times 5 of your savings, or whatever times they are going to give you. So get to understand how much you need to save for you to receive maybe a certain amount of money. The main requirement around loans is you need to have like a security or a guarantee that the Sacco is going to get your money even if you default. So you need also to have like guarantors, or what I talked about, like having a community, having people who are going to sign for you loan. And I'll mention time and time again, do not sign loans for people who you don't know. Make sure that you're signing loan for people who you know. The other thing, we have an option of self-guarantee. So self-guarantee is where you borrow your money. This is an option. As a financial advisor, I'm not going to recommend at all, because it doesn't make sense that you have saved 1 million in a Sacco and you want to borrow that 1 million and pay it within maybe 2 years or 3 years on interest. It doesn't make sense at the end of the day. I always tell people, if you're borrowing minimum amount of money from a Sacco, or maybe your normal saving, like the cap, that doesn't make sense. But when it comes to self-guarantee, if you have a title deed, if maybe you have a car logbook, or if you have a property which you can use as a security, it's easier for you to get a times 3 or a times 4 or a times 5, which is the whole essence. So I have gotten so many people who borrow their own money and then they get to pay that amount of money with an interest. It doesn't make sense, guys. So if you're not borrowing times 2 or times 3 of your savings, it's better you withdraw your money, do the development, come back to the Sacco after that period of time. It doesn't make sense you borrowing 1 million that you already have saved in that particular Sacco and then paying it within 3 years with an interest. That's a loss on your end. But if you're self-guaranteeing, using a property for you to get the normal rating of times 3 or times 4, that is okay, because I've always said that Saccos are going to give you affordable loans. That means the interest rate is quite low compared maybe to the banks, or compared to the Shyrock, or compared to the mobile loans and other lending places. Because for example, in banks, you're going to get an interest of around 16 to around 24% if you're going to unsecure loans. So meaning that it's a lot of money which is going to the interest. But for Saccos, they're giving you around 1% per month, which is around 12%, most of them. So it is so easy to grow yourself, and you also don't get that financial burden when it comes to you repaying off that loan. So finally, as you are opening those Sacco society, make sure that you tag that to a financial goal. Make sure that you understand the reason you are there, because it is very wrong for you to stay in a place which you can be able to grow yourself, and then you don't use the maximum opportunity that a Sacco presents. The other thing, make sure that you're not there for all the wrong reasons. As I have said, we have better platforms where you can be able to have better interest rate. And at the end of the day, do not join a Sacco because other people are joining, or do not leave a Sacco because other people are leaving. The whole point is it is serving your purpose, because I have seen so many people who have developed themselves using Saccos by maybe real estate, people maybe buying properties, people even buying their first cars, second cars, business opportunities, and such thing. So it's a very good place to grow your credit score and grow yourself. And guys, as we have always said, it is very important to know your money personalities and to understand what you really want with yourself. It is going to help you a lot, and I hope that you're going to have an easy time choosing a Sacco and you have learned something. And until next time, thank you so much for watching.